This is the Retirement Solution Podcast with financial advisor Jon Hicks, founder of J. Hagan Capital.
How can you use your tax return as a diagnostic tool to avoid mistakes and better prepare your financial future? This is a very interesting. I'm surprised. As much as we've talked taxes and savings and everything, I have never heard this theory before. So I'm excited to have this conversation with you today, Jon. This is Jon Hicks, financial advisor, founder of J. Hagan Capital. I'm Heather Branch, here to ask Jon about these things that we see on the internet, get his opinion on it, and how we can apply it to better ourselves for the years ahead. So retirementsolutionshow.com is where you can go if you've got questions for Jon and his team. We also have links posted in the show notes. All right. 'Tis the season for taxes. April 15th.
Isn't that a shame?
April 15th is coming. Actually, in your world, it's always the season for taxes. It's just this perspective that we have as Americans about April 15th.
Yeah, the good news, well, there's good and bad news.
Right.
Most people, when they think about tax time, they're thinking about getting all their documents together and getting into their CPA. The crazy thing is, though, is that what we're about to get once we file this year's taxes is really what we're looking forward to. And I think that's what the article alluded to, that we're going to talk about here in a second.
Yeah. Well, it's such an interesting debate about what to do with our taxes, our tax returns, how we receive the information on whether we're going to get a return or we're going to owe a lot of money. But this concept of how we can improve our overall picture beyond April 15th, based on the information that we gain in that space, is an interesting conversation. So Morningstar's Christine Benz, this is where it begins, this conversation. She was talking about how a lot of us will take that final opportunity to make last-minute IRA contributions to improve our tax picture for the previous year. And it comes with a big caveat. So this is what Christine Benz was pointing out.
If you are making that 2025 contribution right now, one thing to do is see if you have the wherewithal to also fund 2026 at the same time, because there really is a procrastination penalty, as Vanguard has called it in some of its research, because it sees these contributions coming in at the 11th hour. So you do want to get the contributions invested as soon as possible, because those are months of foregone compounding and those can stack up.
So Christine's point is all of the months of compounding interest that you have lost out on by delaying the contribution to your IRA. But the overall idea here, Jon, is when April 15th passes and we have filed our taxes, take that tax return and use it as a diagnostic tool to identify decisions that might actually matter more for your retirement plan and savings going forward. How do we do this? What do you want people to know?
Yeah, so I think the phrase that was used was use your tax return as a diagnostic tool, right?
Yeah.
But I think that there's a much better way to think about this. Now imagine, I've got two kiddos, right? So I've got a 16-year-old who's a sophomore in high school.
Good luck. Godspeed.
A fifth grader who's 11, right?
Okay, yeah.
And so, my hands are full, both girls.
Yeah.
Both of them unbelievably talented and, really good in school. But having said that, instead of looking at our tax return as basically a diagnostic test, I want us to think about it like a report card.
Okay.
Because this happens in my house every single semester, right? So if I got one of my kids' report cards and it showed a D in math, imagine if I took that, looked at it for a quick second, immediately filed it away, and did nothing for the whole next year. What do I think would happen to my daughter that got a D in math? Do I think that she's going to do better from that? Do I think she's going to learn from that? Is that going to be positive? Now, I'm not talking about, give her a whooping and put her in the corner and take away all of her stuff. What I'm talking about is what can we, what can we learn from that?
Yeah.
Because that is exactly what a tax return is. It basically shows us what happened over that previous year and what can we learn from? Where are the gaps where our money is quietly sneaking in and falling into the couch cushions, right?
Okay.
It happens every year. So I think looking at it more like a report card. If you see certain lines, and this is what I do in the office, this is why we have CPAs and tax attorneys literally on staff in the office, looking at these different line items. And I can't tell you how many times Patrick, who's our tax attorney, will come in and say, "Hey, Jon, did you see line 17? On the return?" I'm like, remind me, what are we talking about? He said, well, they had this much of extra income. Do you know where that came from? I don't. Look in the client's file, find out if we found that out. Amazingly enough, it's a little bit like a mystery novel meets a report card. So when we're looking at last year's tax returns, and every one of us do this, it's basically showing us where are we doing exceedingly well and where are we missing some opportunities. So instead of just filing that report card away, imagine if all of a sudden I realize, oh my gosh, a D in math, kiddo, what can we do about that? Have you talked to your teacher about it? Can we make sure that we're getting a little bit extra help, get a little extra study? Or is it some material that you just don't understand? Well, yeah, Dad, we're doing geometry, which of all math was the only real math subject I was horrible at.
It's tough. It's not the
nothing
usual.
Right. There is nothing that I could do to help either of my daughters in geometry.
Got it.
If it was calculus or
statistics,
anything else, I would be fine.
Algebra.
But unfortunately, it was geometry. So having said that, if I saw that D instead starting applying things, do I think that I would have a better result than just filing it away and waiting a whole year? But that's what most people do with their tax returns.
Right.
They get it. They wince at the fact they see a number they have to pay, or they're happy about the amount that they're going to get back, but they don't make any changes. That is the best way to use your tax return. Christine says as a diagnostic tool, but I think it's as a report card. It also lets us know, wow, did we have so much income and we didn't defer a lot of it? Or do we have way too little income we had to pull out of accounts? Did our RMDs cause our Social Security to be taxed? Should we, knowing your income, should we take Social Security at 63, 64, 67, whatever full retirement age is? All of those decisions, believe it or not, most of the time, my staff just looks at the tax return and they have a really good understanding. It's like, if they didn't utilize all this income, do they want to defer some of that? Do they want to kick some of that out and maybe do some asset shifting and get those assets in a tax-free position where they'll never pay taxes on that income again? Those are the things that we're looking at. And that's one of the biggest opportunities. So in our office, when we're talking to someone about what they want to achieve, typically what we're doing in that second or third time we're meeting with them, we're doing a quick glance at their tax returns, asking them about their CPA. Hey, so does your CPA, do you just give them a big old shoebox of all your receipts and all your expenses and hand it to them, let them sort through it and file your return? Or are they actually being proactive? Thinking about things like, wow, you had $180,000 of income last year. You really only spent about $67,000 of that. Do we want to defer some of this income? Do we want to turn some of these spigots down a little bit so it does not create so much taxable income so that we can have this money grow instead? Those are really great things. As a matter of fact, we had a client, and she is fabulous. She's an engineer by trade. Every spreadsheet that Excel could ever create, I think she creates her own spreadsheet. She was that methodical about how she does everything. But amazingly enough, when she got her tax return, she never actually looked at that. And that was one of the things we went through. Is like, hey, and I'm going to call her Stephanie. Stephanie, you've made a lot of great decisions. You really have a good handle on a lot of these things. Hey, tell me what this is showing on your tax return. And she was like, I really don't know. And it wasn't that she was unaware, is that she'd never really looked at it in that regard.
Right.
We found out that they were getting income from sources that they did not need, weren't using it. They were paying their highest marginal tax bracket in rates to take this income in, only to put it in another taxable account, which also created taxes for them every single year. Yikes. When we addressed this with her and just showed her, hey, so let's keep that asset. Let's just put it in a different bucket. It saved her, no joke, Heather, it saved almost $73,000 in taxes over the next 3 years.
Wow.
Simply taking the exact same asset that we did not get rid of. We simply put it in a different bucket that's going to be taxed differently. $73,000 fix. Now, her question was, well, why shouldn't my CPA have seen this? Whoa, you didn't ask them to.
Right.
They didn't know to tell you to do that. They assumed that you were utilizing that income or you liked it. No one wants to technically turn down income unless they decided, wow, I'm probably not going to spend all that, right? So that's what my team was able to do. Simply find a way, $70,000+ over the next 3 years, simply on putting an asset in a different bucket. She still has that asset.
Yeah.
She already had that bucket. It's just like reapproaching things. So diagnostic tool is good, but a report card, what I would have given her on income in that situation, some teachers would have said, well, you get an A because you had unbelievable amount of income. For me, it wasn't efficient income. For me to optimize everything, I would have given her a C-. Not because it was bad that they had the income, but because they didn't have a plan for what that income should do. By repositioning it, not only were we able to save money in taxes,
right,
but now we're able to have those assets compounding without taxation. And guys, that is what Einstein was talking about. When he said that compound interest is the eighth wonder of the world, the only way it works is if it's unimpeded, which means nothing stops it. Like having taxes come out every single year, we fixed that.
Right.
Imagine how easy it would be to just be able to know what should you do so that next year's tax bill is less, or it may be a little bit more, maybe a little bit more than you thought, but you're going to save yourself hundreds of thousands of dollars in the long run. So this is that perfect time of year as we're kind of thinking about, we talked about March Madness earlier, but I think about spring cleaning. Look at that tax return and actually consider, should you give that to your financial advisor? I say yes. Let them see what's been going on. If you don't have an advisor that does that, or if your CPA does not really give you a lot of advice on the financial game, call our team. Yeah. Let them show you what that report card really means. You may have an A in effort, but a C for results. Well, we want to fix that, right?
Yeah.
Because when it comes down to grades, some of us did really great in school, some of us not so good. I would much rather have a C in the class, but get an A in application all day, every day, right? And that's what we're really talking about. Taking that report card and doing the right things for the future part of your life and potentially the next 25 to 30 years of retirement.
It's so much more than a piece of paper showing you what you owe or what you're going to get back from the government. Your tax return can reveal a lot of information for you, for your savings, and how you can do better by yourself and with your savings. Jon and his team ready to show you how that might work. So if you've got questions about how to apply this to your own plan, maybe you're working with a CPA or an advisor and they're not having these conversations with you and you want a second opinion, Jon and his team, they are here for you. RetirementSolutionShow.com is our website where you can go to start the conversation, ask these questions about how to do better with your tax return, learning from it, making the right moves moving forward. Jon and his team want to show you what your options are. So it's RetirementSolutionShow.com or just click on the links we got posted in the show notes.
Thanks for listening to the Retirement Solution Podcast with Jon Hicks. Begin the conversation about your savings plan with Jon and the team at J. Hagan Capital by visiting retirementsolutionradio.com. Be sure to listen to Jon's radio show, The Retirement Solution, Saturdays at 8 a.m. and Sundays at 9 a.m. on News Radio 840 WHAS.
J. Hagan Capital Incorporated is not licensed in all 50 states. To find out if J. Hagan Capital Incorporated is licensed in your state, please call 502-690-5635. J. Hagan Capital Incorporated is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. By contacting us, you may be provided with information about insurance and annuity products offered through J. Hagan Capital, LLC, NPN number 1882794.